nobody ever just sits with the quiet, like ever? That sounds really exhausting. In the future, everyone's connected to everything, and people are still lonely. Okay, but do we at least still stay outside until the streetlights come on? Wait, so you're telling me in the future, people just stare at a little box all day, inside and outside?
And in the future, you don't even own the music. You just pay every month to borrow it. Like, if you stop paying, the music just disappears.
Wait.
Baby,
So before people eat,
apparently Girl Scout cookies are linked to autism and cancer. Girl Scout cookies are linked to autism and cancer. Alrighty, guys. Good morning. Good morning. It's time to get our levels for the day. It's time to have a fun-filled day full of trades. Let's get it. Let's get it. Let me share this to one more place. Alright. So, markets are still pretty much sideways this morning. I tried to trade Asia unsuccessfully last night, so that will be the last time I ever trade Asia session. I'd go short, it go long. I go long, it goes short. It was retarded. I don't think I've ever dealt with that kind of retardedness in trading, so we gonna stay away from that market. Markets are looking kind of bearish, micro bearish this morning in this sideways kangaroo market. That's what they're calling it, so I'm gonna take their words from them. As you can see here, market opens in about 5 minutes. There's no need for us to chase the dragon here. We're just going to wait. The levels are something that we are going to do, considering it is a new day. I really think only this one needs to change realistically. It's weird. Kind of lagging a bit. Okay. Alrighty. See, so we have a a structure here, right? Now making a higher low, favoring bearish shorts today. That would make the most sense to me. I don't know. Markets have been kind of weird lately. Where was the 9:30 open yesterday? Right around this area right here. Went short to go long for the day. So now we're going short for the Asia market to the London. London's now closing, so we're trading off. London closes at 1 p.m. We're open in 4 minutes on New York Stock Exchange. Let's put this on candles. So right now I'm targeting the top of the wick, top of the body, bottom of the wick, bottom of the body, right now for my support and resistance levels. I'm trying to get this done quickly prior to the market open. This is a resistance level. This is a pivot level. This is a resistance. Okay, that's fine for the day. We're going to see where this pivots. Two minutes till open. Alright guys, you guys are free to ask some questions for this morning. We have 1 minute till open. Remember, this is free content that I do every single day, breaking down levels, breaking down the markets. Feel free to ask questions here on my strategy. I use a multi-time frame setup, the 5, the 15, the 2 minute. Simply here just waiting for the market open. There we go, we have market open. We got some tech stocks shooting down, some tech stocks opening up to the tops or to the high side, about half and half. So right now, what we're waiting for is we're waiting for confluence on the tech stocks. So as you can see here, if Google's going up, Meta's going up. Well, Meta's actually at its baseline. Microsoft is going up. We have Apple and Amazon, Nvidia, and Tesla coming down. With AVGO coming down, we're now favoring a bear bias, right? So what it might do is it might drag the other 3 tech stocks down on principle, but we're looking for an overall 6 stock confluence inside of the markets in order to get into a short today. If the story changes and we have 6 tech stocks coming up, then the overall bias is going to be a bull bias. I trade these macroly every day, so this is a day trade. I do not swing trade throughout the markets. I think that's kind of like a different strategy for what I use here. This is a multi-time frame setup. I do my levels very simply using candles, right, on the highest time frame possible. I work myself down from a monthly, weekly, daily, 4-hour, 2-hour, 1-hour, trying to find the spots of confluence on the top of the body, top of the wick, bottom of the body, bottom of the wick. That looks something like this. Back to candles. Back to the weekly. For the weekly, what I look for is 2 touch minimums, right? So as you can see here, none of these touch, but if we drag this down just a little bit further, we got 1 touch here, a very close touch here, a very close touch here. If we broke that down into a 15-minute, we can see here that this is a level of resistance. It's been a resistance for the past. Now, it does break down short of this level, so we take note inside of our trading journals. This is not a strong resistance, but sometimes what we can do is we can build boxes around them. Now, I've learned this throughout a couple of different mentorships. It is a helpful tool to find a medium, maybe 50 points below, 50 points above, right? And then you set a box. And at this point, what you can do is you can go short inside of these levels, right, without having a definite. When you have static supports and resistances, it's difficult to sometimes nail the entry points in the markets. So sometimes you have a spread, 50 points up, 50 points down. That gives you a little bit more grace when it comes to entering these positions and actually being able to be profitable, right? So at the present moment, we don't need to worry about that particular resistance level because we're now at the pivotal level down here. I've already made my levels for this morning. You guys can go back and see exactly how I make them if you rewind the videos, but stay live while we make a trade here. Now, I am using a proprietary firm account. In proprietary firm accounts, it's very important that instead of you getting the trade right, that you're risk managing the trade properly. We target 50-point moves inside of the market on a 50K account. We max trade 3 contracts. We do this daily. I don't ever go above or I don't go below 3 contracts. I always trade as a constant 3 contracts maximum. Okay. If you are trading a 100K account, then that's okay. You can just use 6 contracts, but that would be the maximum there as well. Try to trade a little bit less. Now that the 5-minute candle is almost done, what I'm waiting for inside of the market is just for it to pick a side and pick a direction, right? I try not to look at my account balance during this time so I can focus on the markets. That most important thing is I'm not focusing on the money, I'm focusing on the setups that it's giving me. We use EMAs, 9, 20, and the 50 EMA. I use it as a wide range across 2 of the time frames, and on the single 2-minute time frame, I only use the 9-minute and the VWAP. There's a reason for that. The reason that I use VWAP is because it's widely used for every successful trader that I've ever met in my entire life. They usually only trade with the VWAP. Now, the 9 EMA gives me a little bit more confidence in getting into side of trades. When it is above it, I would go bullish. If it's below it, I go bearish, right? However, in this strategy, we do not trade the 5-minute candle. A lot of traders, they get their accounts wiped out because they trade 5-minute candles in the beginning, right? There's no point to it. If I showed you a track record of all of my trades, it really doesn't matter if you trade the first 5 minutes. Like you could also trade news, but you're taking a lot of inherent risk that you don't need to inside of these trading accounts. So as you can see here, we've already talked about the top-down analysis on the markets. It's a kangaroo market. It's bouncing sideways in between 2 major support and resistance levels. These are static levels. When you have EMAs, what we call those are dynamic support and resistance levels. Why are they dynamic? Well, they move. That's going to give you a high level of confidence knowing, okay, this is an area of interest that sellers might take control. This is an area of interest that buyers might take control, right? As you get your XP points inside of the markets, what we simply do is we have all of these tools for us to use in order to make high confidence plays, A+ setups. So back to the tech stocks right now. And I'm sorry, I'd actually had that on the other screen. So here you go. These are the EMAs. It's usually displayed in green as 9. The 20 is the yellow one, and then the red line is the 50 EMA. And I have that on the 15-minute chart, 5-minute chart, and the 2-minute chart. Back to the tech stocks, I will call them out for you right now. Apple is going short, Amazon's going short, AVGO is chopping sideways, Google is chopping sideways, Meta is going short, Microsoft is kind of chopping on the higher side, but it's not going bullish. Nvidia is chopping at its daily open, so we don't have any story here that would give me high confidence in a setup and a play inside of the market, so we wait. I do this for an hour every single morning. This is how I buy my time back inside of my day. I have other streams of income, but this is what I like to do for an hour of every single morning, just to make 1 to 2 trades per day. That's it. When you're using a proprietary firm, that's kind of like the maximum that you want to be trading to avoid over trading. That's like an account killer. Keep that in mind. When you overtrade proprietary firms' accounts and you are a newbie, you are going to lose a lot of money. Okay, it's just how it is. Those accounts are designed for you to hit the trailing stop loss. All right, so right now what we're waiting for is, if we go long, I'd like to go long over the EMAs on the 15-minute. That would give me a high confidence setup that we would probably push towards the resistance level. Because we're above the pivotal level right now, we could target a 50-point move here. But remember, we have these EMAs here. These are dynamic resistances. So if we get the confluence on the tech stocks, which we don't have, I would rate this at best a C+ setup. Maybe even a D setup. When we have at least 6 of the 8 tech stocks, that gives us a B+ setup. When we have 7, I'd rate it an A setup. The reason why is because the one tech stock that never follows the other 7 tech stocks is Tesla. For those of you guys who trade Tesla, I'm sure you guys are aware, it does whatever the hell it wants. Sometimes it's down in the market when all the other markets are up. Sometimes it's up in the market when all the other markets are down. So this is starting to become a little bit of a higher C+ setup. I don't like how Apple is coming down. The rest of the market's kind of fighting for that bullish positioning. I'll show you guys. You see Apple's coming down. This is the heaviest weighted average inside of the market. So if we go just by Apple alone, which does move markets, we have 2 red volume candles coming in. The Amazon is coming in as green volume candles. Broadcom is red. So we have 3 red, 1 green. We have 1 more green here, so that's 2 green, 3 red. So now we have another green volume coming in on Microsoft, so that's divided. And now we have 1 red volume candle coming in on Nvidia, so that is pretty divided here. We're in 4 and 4, pulling in both the separate directions inside of the market. That doesn't give us high confidence today that a trade is going to be made in the first 30 minutes of the market. This is where most traders need to just know, I sit on my hands. I wait. I don't want it. I don't like it. And that's okay. We don't have to like the markets every single morning, but we do have to show up to the markets every single day. That's the only way that we're able to get our positional plays. It's the only way that we're able to be successful every single day, is we don't miss opportunities. Am I right? All right, so while we wait, how about we do something even cooler, right? I like doing this every single morning as well. I'm going to show you guys my most profitable crypto strategy. For those of you guys who trade on crypto brokerages, I trade on BitUnix. Every morning I go on BitUnix exchange, I apply the changes, and I look for coins that have gone up at least 50% in the past 24 hours or 72 or 7 days, right? As you can see here, none of them actually are on that 50% gain. So this might be a little bit difficult to get a trade throughout here, but that's not impossible. Okay. I have been trading Solana for those of you guys have been here previously, right? So you can see here, I bought here, I sold here, the stop loss hit here. I've been mainly trading this box because of the overall trend inside of Solana is just an accumulation zone, right? That's evident of a P1 phase accumulation. For those of you guys who don't understand phases of the market, you guys should study that because it's 4 phases that's going to change your life. If you understand phases of the market, every single day you can wake up and understand exactly where the markets are making or where the money is being put in. So this is just a phase 1 accumulation. I've been talking about taking in a lot of coins here on spot. That's overall going to use a J-curve model that will eventually come back up as coins usually do. It just takes time in the market. That's how you fix a lot of problems inside of your portfolio, is time in the market. So 4-hour chart here. Let's take a look real quick. Let's go actually to the daily. This is a perfect example, right? So here's a phase 1 accumulation. Here's a phase 2 markup, right? You can even say that the phase 2 markup was here. A phase 3 consolidation period, and then a phase 4 markdown, right? Then back to a phase 1, phase 2. These consolidation periods on crypto are usually very small because people get bored very easily, and then a phase 4 markdown, right? Now we have a micro phase 1 here. This was kind of radical through 2004 to 2005 because people were expecting these huge gains on crypto. Michael Saylor started to step in, buying a lot of crypto. That created a lot of hype around the market. So it pushed us back into those high levels. And now we're just simply coming down on that phase 4 into another phase 1 accumulation. Now this is a very micro phase 1 accumulation. That's why I'm not going heavy inside of crypto right now, because we still have a lot of room down. Now, do I think that we're going to see $20 on Solana again? Most likely not, because what drove us down here in 2022 in the first place was COVID. So this was a major market event, not only for cryptocurrencies, but also for stocks as well, which, by the way, now we're getting a different story on stocks. Let me show you guys. Red, 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 red. So now we're getting a different story on stocks. Now the setup and the play is starting to set itself back up. I have this on the 2-minute, right? These dotted lines. That's a parallel channel into a previously traded session. So if we get back into that session traded right here, as you can see, that's a parallel session. That's a structure that was set up back in March 9th. So I do like to allow history to repeat itself. If we get inside of this trade, I will feel comfortable underneath this level because it would have broken a previous structure, and I will take it for a 50-point move down. My stop loss, very important, right, will usually be a candlewick close above the 9 EMA or the closest level. In this case, it's 24,744. We just broke that level right now. So what you can do is you can size into this trade. You have confluence inside of the markets, right? So now we're breaking this structure. We are inside of the channel on the 2-minute, right? If you don't feel super confident with your trades, right, and you're a newbie trader, what you can do is just size down your trades. There's no shame in understanding the markets from a learning perspective, right? We simply want to trade for a long period of time rather than a short period of time. Now, I did not set a stop loss here or a take profit because I did not click my preset. So I noticed that I'm going to manage this trade with a soft stop, with a soft take profit, right? So if that's one contract in, that's $30. That's very good money. So far, I'm almost 10 points below, 20 points below where I entered the trade in position in the first place. I think I entered at 24.30, to be honest with you. So that's 10 points. I can buy into it a little bit more, adding 2 more positions to the market and going for my max 3 trades. However, I'm just going to do, for example's sake, because there's some new people in here, is show you guys the process, the step-by-step process, right? So that is almost 30 points, right? That's 30 points exactly. That's now 40 points. We're getting to 35, right? 35 points in the market. There we go. That's 40 points. 10 more points. 10 more points in the market. SOCKS. 50-point move. Nice and easy, right? Not a difficult strategy. Now, you could have held that, right? But what I usually do is I target smaller point moves and I utilize that. It would have been a 150 point or $150 move inside of the market. If you do the math on that, that would have taken you guys all day to make, right? I'm just using this as a supplemental income. I'm showing you guys a very simple strategy, right? That works for me every single day. So that was part of my 1 trade maximum for this morning. Okay, so I'm going to count that as my first trade. I'm allowed 1 more trade for the day. Now, there's no reason for you to exit this short trade. In fact, the only thing that I would want you guys to do is be cognizant of the stop loss, right? So if we entered at that 24,744, the structure, what usually happens sometimes is that it shoots back up, right, for a fake out. I've seen this a lot of times inside of the market because new traders, they don't know what they're doing, which is okay, right? You don't know what you're doing. And market makers are going to try to get you to sell your position at break even or even for a loss. So what is the plan? What do you want to do? How do we make money or be able to keep our money inside of our accounts? Is simple. We usually put our stop loss at break even when we're at 50 points. I know it's tough. Sometimes you're going to lose the money that you gained, but that's part of the R&R. That's part of the risk and reward situation inside of my strategy. So for example, right now I would have been stopped out. Why do you think I took my 50 points? Because I take what I can get, not what the market's going to give. Right? The market can give me negative just as much as the market could give me positive. But I know as a trader, what I can do is I can keep watching the confluence on the tech stocks. We're still red, 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 red. So we're still A+ setup for shorts. But remember, just because I have the confluence here doesn't mean the market isn't going to do what it wants. So now you see, market makers are trying to change the story here.
And show strangers?
Sorry. Get rid of Twitter. Okay, so market makers are trying to change the story here. Remember what I just said. What they like to do is they like to shake the tree, right? I couldn't have given you a better example myself. I took the 50-point move, right, from 24,744 to 24,680. Now they're coming to try to shake the tree to push it back to that pivotal level on the 15-minute. Oh, let me put that back on the screen for you guys. Here you go. So they're trying to get back to this pivotal level here. It's very important for bulls to get back to that level. They don't want to see the markets going short for the day. The overall trend is sideways, however, favoring bears. Now, there's no reason for you guys to exit this trade other than two things. If the candle itself is looking something like this, let me get rid of the volume candle. If you have a elongated line on inside of the 15-minute candle, and the body of the wick is basically at the top of the candle. For those of you who don't know what that means, it's very simple. It just means that buyers are consuming the seller's price action. It's important to know that these candles close every 15, every 5, and every 2 minute. As you notice on the 2 minute here, I'm going to zoom in just a tad. You have a timer right here next to MNQ 2026. In 5 seconds, it's going to count down a new candle. So now it broke underneath that structure one more time. Sellers are coming back and taking control of price action inside of the market. Did I not talk you through exactly what sellers are going to do? When you get into the mindset, the psychology of sellers, and you understand how they're going to fight buyers, it becomes a very simple process of making money every single day in these markets. There was no reason for us to exit that trade. What we could have done is sized into the trade those two contracts, or re-enter the trade with the same stop loss strategy that we applied when we entered the trade to begin with. A candle wick close above the nearest level, or EMA. That ensures that we have a paper cut loss for the day, and we are not going to lose too much money on a proprietary firm account or an account that we are trading physical equity from. Okay? So, right now, we're still bearish in the short. We're looking for the close below 24,680. If we get the close and the follow through, it's going to push down to 24,577. Why? Because of confluence. Confluence and the tech stocks right now are all pointing to bearish price action. What do we need to do? We just need to give it some time. Give it some time to play out. Be patient. Okay, if you have a coffee, sip some of your coffee. I don't have coffee, but I have a protein shake. Pretty good. Okay, so the story is starting to play out. Came back, tested a high structure, now broke underneath that previous low. Now we're looking for the follow through. I want it to follow through. And be patient. Be very patient here. Don't let the market shake you out. The only time you're going to exit this trade is if the 5 minute closes in the next 30 seconds green. And it has to be a flat doji for that matter. It would have to look something like this. This is what the doji would look like. Short and stubby, like a cross. Okay, that's the sign of God, get the hell out of your position. Okay. So we're still waiting patiently for that follow through. We're waiting patiently for that follow through. Tech stocks are still coming down. There's no need to exit the trade. Okay. Let me put volume back on to our 15 minute. Let me zoom out of here. Just a bit. There you go. Look at that follow through. Right? That's 100-point move in the market. Easy peasy. Easy peasy. Walked you guys through that strategy. Walked you through how the markets are going to move today. Okay, so be mindful. We're approaching a support level here on the 15-minute. We made those support levels this morning. Yes, it could break through the support level pretty easily. I also didn't take the trade because I have no need to trade. Like, if I made one good trade in front of you guys and I'm walking you through the second one, I'm more than happy to walk myself through another trade a little bit later today. I like just focusing on educational content for you guys and showing you the strategy that I have that's my most profitable strategy inside of the markets. Making you guys money every single day makes me happy. That's all. Okay, so now we're approaching that support level right here on the 15-minute. Area of interest. So if you're in a trade, maybe you're scaling out of the trade. You're protecting your position. Okay? So you can see here, it's starting to reject that level. It doesn't like that level. One of the tech stocks, Microsoft, doesn't like that level either. It's turning. The rest of the other 7 tech stocks are all pointing down. So there's no reason to exit. You could scale a position and take a profit here. 100 points in the market is a-okay to me. We're not counter trend trading as well. I know that some people get this mindset of like, okay, now we're getting to a support level. We're going to reverse here. No. Get that out of your mindset. We're 38 minutes into the market. We've already made a 50-point and a 100-point move in the market today. Now the green candle comes in. Are we worried? No, but we're taking note. Okay, so the first green candle came in. Would be the first really bad sign is if it breaks that 9 EMA on the 2-minute. Okay? That's the only sign right now that we would get out of our trade, and we can get out of our trade with a profit. And we'll live to trade another day. My goal for this channel is overall to get you guys into one good trade a day to make you that little supplemental income so that you guys can afford gas, you can afford your groceries, you can take your wife on a vacation, you can get her a nice ring, you can buy that sports car that you may like, right? You don't need to be making hundreds of thousands of dollars a month to be able to afford the amenities in life. We might get this pushed to the 630. Be mindful here. Our ultimate take profit would be to the base of that structure at 24,577. And then we're done for the day. We're turning off our computers, we're getting up, we're getting out of this office, and we are doing something else with our day, okay? Tech stocks are still red. The only one that's kind of fighting is Microsoft. But damn it, price action moving like a snail today. Might be a slow bleed. So what I might do. Alright, now we have our first green candle coming into the market. I don't like how that closed on the 2-minute. The 5-minute just closed green as well. The 15 minutes coming in green. So what do we do now? What do we do? That's right, protect our positioning. If you've not scaled out of your positioning, I told you at the last couple candles it was probably best to scale. Now we're touching that 9 EMA, I would probably be out of my trade. Could close, could keep going down more, but I'm not looking for the whole pie. I'm just looking for a piece every single day. Right? We touched and rejected. Most of you guys are probably out of your trade. Very good. Clap it up. You guys have a very profitable trade right now. You just had a very profitable trading day. That's amazing. you're beating almost 92% of people in the market every single day. We had 2 very good trades. 150 point move is easily a $450 day if you sized and positioned yourself correctly inside of the markets. $450, by the way. I have it written down. That's almost, if you can pull that every single day for an entire year, that's $126,000 a year. It's great stuff. That's great stuff, man. That's a sports car every year. That's a new M5. All right, with that being said, it looks like we're about to close this position on principle that the markets are starting to reverse here. I've given you guys 42 minutes this morning on 150 point moves. There is no need to make more trades here. I simply come every single morning for at least 1 hour, and in this case and scenario it was 42 minutes, and I've given you guys a 150 point move in the market. There is no need to keep going and keep trading. That is called over trading. Get that out of your mindset, get that out of your belief system that that's what you need to do to make $100,000 in the market. That's not true. You need to compound good trades every single day, and over a progression of an entire year, coming back to these free courses, because I will not have this for free forever. I'm going to be giving this for 1 year, an entire year. I'm going to give this for free. All of my tips, all of my tricks, all of my secrets, I'm planning on trying to make at least 1 millionaire by 2027. Okay? So I appreciate you. I appreciate you coming to the class today. I appreciate you taking notes. I appreciate you taking the trades and putting your confidence inside of my strategy, as I put confidence inside of my strategy every single day. I'll see you guys tomorrow, same time. I try to wake up a little bit before 9:30 so we can get our levels done. If you want, subscribe and click the little bell so you never miss a live episode. I'll see you guys later. Have a great day.